Yeah. Tuesdays, 9:30 Eastern. No guessing, just structure. Let's work. Screens lit up, yeah, the charts on glow. US 30 moving, gold on go. Ketchup cross mustard, that's the code. Water under price, now watch it. No hype trades, we discipline. Scanner beep, yeah, we locked it in. Stop hunt phase, then we enter clean. Structural moves, that's how we win. No gambling here, we calculate. Bounce off water, then we activate. Our consistency over chasing shine. Consistency over chasing shine, yeah. Trade live with fly gold. Heed your words, execute the plan, stay bold. Structure, no guessing. Automation, lessons. Every Tuesday we in control. Execute with live with fly gold. Both sessions paid, we ran it twice. Risk managed, clean, precise, not nice.
So you will go to the on the app. I know it's the pencil. I got it lined up like this, but it's above the paintbrush. So here on the left side, you would hit that, and it's the long position for buys, short for sales. So I'll show you. I'll restart this and show you how I did that.
Okay.
I got it keep popping up on all these other alerts. I'm gonna delete that. So I come in here, open that up. I'm looking for a buy, so long position. I come and put it at the entry. Find your entry, click your button, it pops up. What this does is going to show you your risk to reward ratio, and it'll populate your TP and stop loss to the right side of the chart. So right now, you're looking for the percentage to be at least 1. It's on a 0.67. So when it's a 1, that means my stop loss and my TP is the same. So let me see.
So you just put it on your entry. I mean, entry. Let me see.
Yeah. No, I think I might have looked at that wrong. It is a 1. Risk to reward ratio is already at a 1. So if I adjust it, see how it's lower than a 1? You see that moving at 0.5, 0.4? That, yeah. So that's me adjusting my stop loss. Now, once I set my stop loss, I always find my stop loss first. Because if the stop loss don't make sense, or if it's too much or whatever it is, I'm just not going to do it. So I find my stop loss. And then as I adjust my TP, it's going to change back to a 1. That lets me know my stop loss and my TP is the same. Now, I always say this as a beginner, as a newbie, there should always be at least a 1.
1 to 1. Did you drag that to move for the stop loss?
Yeah. Yeah, you do what you want with it. So
how do you drag it from the, let me see. I got
just click on it and hold down and drag it like anything else you drag when you click on something.
Oh, okay, I see that. Oh, that's nice. Okay. Know how to do that now.
You playing with you, Julie.
Learn something new every day with your fly gold.
That's how I settle. I figured this was easier, and it's honestly quicker for me to do this. I come and do this right quick. And then I'll go over. I do everything from the app, so it's way easier. I love the app. So let me see. I'm trying to find it on my desktop. You would save the image. Like I don't screenshot it. You can save the image itself straight from TradingView. I'm finna find it on here on the desktop.
You always drag it to the 100%?
Yeah, for the daily, yeah, because I could go for all targets. I like it to hit all. I'm a hold mine unless something just go wrong.
Right.
So like yesterday didn't go, like it hit all the daily targets, and then I went in there and put new targets. I'm gonna explain that right quick so you can get what I'm doing, where I'm at, for the people that are swing position traders and up or whatever you are, or you know what I mean, for those people. I'm gonna get to that. I'm trying to see if one of these gonna pop up the save image. Somebody probably trying to tell me how to do it. I just know
And
how to
you,
trade it. I don't know how to use a computer. Anywho, what's this? Oh, that's
and
the
when you,
cross.
and you, how do you? I want to make sure I got that right. At the bottom, when I drag it down for the stop loss, what number I'm looking for to? I know it's 1%. It says risk to reward ratio.
Yeah, risk to
All
roll
right.
ratio. That's it. So
And
mine's is a
right.
3-to-1. That means my TP is 3 times bigger than my stop loss.
There you go. Okay. Yep, I got 3 to 1. Okay, that's beautiful.
It should be at least a 1. That's 1-to-1. And then as you get more accurate, get more confident, you want to go to at least like a 1.5, 2, at least a 2. You get to a 2, you good, because you can lose 50%, win 50% of your trades, and you'll still make money once you're at that point. That'll start the work once you at a 1.5. Because if you doing a 1-to-1 and you 50%, you ain't made no money. You just right where you started.
Right.
But once you get to a 1.5, you good. You can suck at trade. That's why you'll hear some traders got bad win percentages because they use small stop losses, but they go for big trades. And when they finally win that trade, it made them money, compensated all the losses, and still ended up in profit. That's how some of them are. So we work on both around here. We need to have a good accuracy and a good risk to reward ratio. I do not see this thing though. It's easy on the phone. That's crazy because I don't even know if it should do it on the desktop. That's the full screen. Anywho, what else was I finna show? The ADR. I'm gonna get into that and then I'm gonna go over a few basics because I got a few new people coming in. I'm gonna go over just the basic ketchup and mustard stuff and whatever else my brain decides to think while I'm doing that. Unless somebody got something else specific they want me to touch on, and I'll mix that in there. So before I get into that, what I did with the trade we took yesterday, we did the buy, and I'm gonna show the past daily ADR. So we got into the buy here. And this right here was the 100% on the daily. It hit all that. All the targets was hit. So I was saying, if this thing decides to keep pushing up, I went and changed the SADR to the weekly to give me more targets. And that's why I got it way up here and it came up to the 100% for the week. So that was like actually real time on how that works. Because I held my trade, eventually it came and pulled back. And by that point, I did have my stop loss and profit because they had hit all the 100%. So that's what I'm working on with managing the break even, the stop loss, and the trailing stop. I'm gonna leave. I entered 3 times yesterday. So when I entered those 3 times, I put a TP at each entry. So where
Right.
we go? And I've been going over that because this is key. This is something everybody been trying to figure out. This thing like it's gonna pull back on me. This is something everybody been trying to figure out how we managing our trades. And so enter in more than once. You gotta do the math, you gotta do your percentages, you gotta know your lot size and how much of the account you risking based off your stop loss and figure out your sweet spot. Because I had different size lot sizes. So I left my biggest one is my first TP. That's my target for the day. I'm good. I don't care what happens after that. When I do that, if I'm adjusting it, my other entry, I'm going to put at the entry, the break even, put my stop loss and profit with the second entry, and the TP is already set for the next TP. And then when it got to the third one, that hit, and on a good day, they all hit. So I'm leaving one entry that's going to be my smallest lot size. I'm leaving that stop loss where it's originally at when I first started the trade until the day is over with. When that day is over with and I caught that move for the day, that's what made me put that stop loss and profit. It was if it was going to continue to buy, it could have kept buying and I would have just been taking partials at that point with the new targets that I set when I looked at the weekly ADR. you could still leave your, this is the part you got to get past. Whether you're going to put your stop loss in profit the next day, because this is only for people holding trades over the day anyway. If you get your goal for the day and you're not doing that, you ain't worried about none of that. But if you holding it for 2, 3 days, looking for that like I do, or longer, or whatever you're doing, it's a battle between what I'm doing is I'm gonna let the day pass before I adjust my smallest lot size to put that stop loss in profit. But if you do the math, if you're okay with it, because I do this too sometimes, is that I'll leave that stop loss where it's at. And if it hits it, I'm still up because of the other trades and the other entries I took. So I might take a smaller loss on that last entry, but I've secured my profit and my bad with the other ones. So that's the mix you got to be okay with. And then if you're using a trailing stop, I probably won't do that until the third day. I'll go 2 whole days and leave my thing at profit because that's going to probably hit at night. And, in situations where you could have caught the whole darn thing, like these situations, for example, somewhere along here with these pullbacks, it would have hit your trailing stop. But you got to anticipate the pullbacks during the Asian and London session if it's buying New York session or whatever the case is. So that that's my method right now. Um, the only thing, because most of us, like, I'm using all the platforms right about now, but the only thing with MetaTrader is it still doesn't have a risk calculator. And I'm gonna take y'all, because I have a few new people, I actually want to promote the getting funded. And so FTMO has their own tools for MetaTrader 5 on the desktop. And I'm gonna be testing those out. So y'all basically gonna see me trying stuff. I don't even know how this work. I'm gonna be trying to figure it out. But they got their own like risk calculator. I believe they have a trailing stop. And they got all this other stuff. It's on their website. So I'm just looking over it because I'm gonna end up just downloading MetaTrader because it's like a new laptop. So I gotta put stuff on here. I just got TradingView on here and figure that stuff out. And my goal is still the same as if it was any other prop. I don't think this is going nowhere, to be honest with you. It's already been 10 years. But the goal is still for your flexibility and just to be comfortable. And nothing's like having your own account, is to get funded and put that money still into a personal account and don't leave it in a prop. Whatever you want to do. But I ain't gonna lie, I would trade props till the wheels fall off because you pay a few $100s to get you thousands of dollars. And if you know what you're doing with it, it works. That's why I like them. Like, forget that shit.
There's some prop funds. There's some companies that are prop funds that are working.
FTMO is what I've been trading. That's the charts you've been seeing me post when I post my profits or whatever. That's FTMO. They on MetaTrader 5. They were in the US. I used to have one of them before, like 4 or 5 years ago. And they left the US and then they came back a few months ago, so like end of last year.
Do they have
They've
these
been,
tricky percentages that you have to do
yeah,
before you
all
can
prop firms
profit?
got that. All prop firms. And that's why I'm not gonna lie to you. If somebody's brand new, I'd rather teach them that because if they can master that, they can do anything after that. If you can stick to the rules and disciplines of a prop firm, you will be a motherfucking beast trader. Excuse my English, but because they still got good rules. Theirs is 5% a day, 10% overall. If you pick the two phase with FTMO, there's no consistency rule. They just came out with a one step that has a 50% um consistency rule, which 50% ain't bad. When it start getting 30 or below, it's kind of tricky. But 50%, you won't be over leveraging anyway, because the way it balances out, if you can't blow too much, you're not going to be picking no crazy lot size. It's going to make you over that in a day anyway. Um, and
And
the
now,
thing is, we
have you
go
pulled
ahead.
funds out? That was the other issue.
If I pull funds out, I did in my first one. I haven't finished this one yet. When I first had it, I did. It was me and a few other traders that had it. So when I first had them back then, yeah. Now I'm just still working on it. I was spending my time trying to pass another one. which yeah, I still feel like I owe you, Randy, but I'm working on that. So actually, I want everybody to see me go through that. Basically, that's what I'm saying. That's basically what I'm saying. So I'm gonna get the desktop and figure out the tools and everything and see how it works. Because if I can do it and I can figure out, you'll be learning at the same time how to do it for yourself. I need something to do. I like challenges, and that's gonna be my home. That's gonna be my work. 'Cause if I just keep doing what I've been doing, that's nothing. I guess I'm bored. But and I want to, yeah, I want to figure it all out. Because if it really worked, and a lot of people like trading from the desktop, then that'll be useful. Because I'm used to trading on the phone. I can go and trade on my phone all day, no problem. And
You use desktop with that with
yeah, with
FTMO.
that, yeah, with the FT, you can do it on your phone. It's just they got more tools that MetaTrader doesn't have by itself, basically. On their website, they got risk calculators and all this other stuff. Basically, like
It's not
that's
a
the reason why
MetaTrader, it's its own platform.
it is MetaTrader, but they got plugins for MetaTrader.
Okay.
If you're using their account, it's still MetaTrader,
Okay, cool. You
and
want
it's
to send me,
MetaTrader 5.
do they give you a referral link? Send me a link, man.
Oh yeah, I got you. Let me see. Let me see if I could drop this in the
Put,
chat.
put it in the chat,
I'll
man.
shoot it to you. I'll shoot it to you. If anybody wanted, I'll send it to you personally. I'm gonna send it to you on Telegram.
That'll work.
Because I don't like, that's the reason why I haven't started Navi trading, because I ain't gonna lie, I don't like managing all that. I don't like flipping through all these screens. I'd rather find me one thing that work and just do it. That's just how I am. Yeah, I've been like I'm trading a MT4 account, but I don't be taking all the trades that I should have took because it's just too much juggling for me. And the copy trading thing has not been perfected to me. The only way to really do that, I think, is to use MetaTrader and use their copy trader and set up the system that way, which it still seems complicated. I'm probably overcomplicated. I got done with it and gave up. I figured it out before, but I haven't done it enough times to be fluent in it, basically. So it's just
Okay.
like
You talking about
you
so you
gotta
can
have
you can use it for NaviTrader for them to trade for you.
you can use the bot, you can copy trade FTMO and everything. Yeah, you can use EAs.
Okay. Cool.
I do like how Next Trade Wave copy trader is set up though. I just wish it was for MT4 as well. That's it. Only because I know people on MT4. Some people still like MT4 better.
I
Uh,
used to use it.
all right, so I'm gonna get to the basics. We finna do the moving averages. I'm gonna explain these things as detailed as I've ever explained them before. The trade look like it's gonna go good. If that was a pullback, we'll see how that go. Once we in it, I don't at least we in something. That's how I am. Once I'm in something, I
Staying in.
get the yeah, I get to looking over the charts. I already don't find the entry, so I ain't gotta watch it basically. I can go in here and run my mouth about other stuff. Let's go.
And where's this recording gonna be at? Because I have to step away.
Recording of this.
Yeah.
I send it to you, want it.
Yes, I
I
do.
don't
Because
like,
I gotta take care of something, so I'm gonna get off. But I want to go over it.
also you want to see the moving averages explained basically.
Yeah, yeah. What you gonna do? I gotta get off the phone right now.
All
I
right,
gotta take care of something.
cool. I got you.
Thank you, sir. You send it
Thank
to
you.
me.
If anybody, I'm gonna send it to you.
Thank you. Appreciate you.
And I will say that if anybody ever want these, some of them I feel like I need to load this on YouTube. I try to keep my YouTube simple because it's a video for everything, and I don't want to post more than one video of the same stuff unless I feel like it was different. If I had a different gym in it or whatever, or the detail, plus the feedback off of y'all. Everybody like, oh, I like this video. Can I get this? Then I'll go upload it on YouTube. But other than that, I can always send you the password and the link to this exact Zoom, or whichever one you will want, and you can always watch it. I just want to throw that out.
Yeah, I want this one because I got to go. Appreciate you, sir. Thank you.
Ain't no thing but a chicken wing.
All right, all right.
Give me some grease and I'll slide you a piece. And I'm sending you this link right now. I'm surprised I ain't got your number saved. There we go. All right, moving averages, basic ketchup mustard strategy. What is it? Man, look what look at this. Just all these wins. Same thing today. And let me double check the chat and everything before I get going. And Luna, I hope you was able to get MP5 downloaded.
Not yet. I'm gonna work on that today.
See the video I sent you?
Yes, I saw that last night. I saw that last night.
I don't know if it helped or not, but that was one. I think we tried that though. All right, we finna get into the basic catch up and mustard strategy. I'm going straight moving averages. Matter of fact, I'm finna do something crazy because I'm just that goddamn bored. We finna just. Can I just remove the candles? Can I just? That would be fun. I'll probably just need to change it to a line or something. Oh, and MT5 on the app got Hakanashi candles. I don't know if anybody knew that. I thought that was cool. See, I don't even want that. I wanted to remove them altogether. We whatever. We're gonna keep it there. I've been on removing them and then can't get them back. All right, we're gonna start with this because it's the easiest W I see right here. Got our W. This was I remember this. That was perfect level foundation. That was level 3 levels right there. W bam. All right, catch across the mustard. Reason why this scanner is giving off buy and sells. This is the basic, simple entry. Anybody can do it. You come up with a schedule. You only take ones at designated times. And you have to recognize the overall trend. The way I recognize the overall trend is first by going to the day chart. Go to the day chart wherever the water is. That's the overall trend. Water's on the bottom, so we mostly looking for buys. It doesn't fully reverse until that changes. When you're a day trader, you want to look at the 4 hour. Wherever your water is at, that's the direction you're looking for. That thing just went in the problem. Go down to your hour. You want to look at to see where your water is at on the hour. When they're all on the same side, that's when it's going to be the strongest. That's when your trade is going to have the most push, the most aggressive. As long as I see it on the 4 hour, though, I tend to stay with that trend until it changes off of that. 15-minute, you want it to align with your hour chart. 15-minute is going to be, once you figure out what direction you are on the hour, you're only going to take trades in that direction on the 15-minute. For anybody probably beginning the 15-minute, probably going to be one of your most frequent used average favorite time frames. You might go lower, you might go a little higher just to get a different analysis, but your basis is going to be a 15-minute chart. So on the hour, I got buys going in. We still in the uptrend. It's right at the water right now, so we're going to see where that goes. So when I see different directions, when I see sales and buys in different directions, I'm only going to take the ones going along with the hour chart. That's how I do it. So the way this works, your ketchup is your price. That's your direction. It just follows the candlesticks. Your mustard is your pullbacks. Your water is your overall trend. Your mayo is your correction and reversal. Blueberry is the same thing. Essentially, they all do the same thing because they're just moving averages. The numbers on them just represent different strengths, different candles, an average of how many candles move within that time frame. So the way this works, we're looking for W's, M's, and W's. We want to find, I'm going to start drawing on this thing. We're going to have a little bit, I'm going back to school today.
No, wait a minute. You said the hour. What did you say about the hour? Because we're on the 15 minute.
You want to know what trend you're in on an hour. And once you know what trend you're in on an hour, you're only going to take trades in that direction using the 15.
Okay, gotcha.
So the 15 gonna give you way more buy and sales, and the water's gonna fluctuate more. Like you got all these buys here. Oh, let me take that off. You got these buys here and then these sales. Basically, you want the mayo because your mayo on the 15 is the water on the hour. So you want your water and your mayo on the 15 to be on the same side in the same direction. So if you're looking for buys, you want your mayo to be on the bottom as well. That's really the cheat code. And your trades are more accurate when the water and the mayo are on the same side. So here we got these sales. The mayo was on the bottom, so we're not going to take it. As soon as it went back to buy and the mayo on the bottom, we could take those buys all over again. These sales right here, we're not taking these sales. That was actually a good sale there, but to keep it accurate as possible, on this day, you just wouldn't have traded because it did number sales that day. And then we got the buys. We wouldn't even take this buy. Even though it did a good buy, the mayo was on the top and the water was on the bottom. Right here, number consolidation. This, we would have took these sales because the water and the mayo is on the same side. We got the mayo on the top, water on the bottom, so they both on the same side, pushing the candles down. This one right here, that was a good one, but according to what I'm showing as a beginner, I wouldn't have took this either. On these, you could have took because the water's on the bottom, the mayo's on the top. They're on the same side. So those are going to be your most accurate trades. All of these was good to go. All that was good. All this was good. All that's good. This right here, when I took those sales. That's beginner. If you can master that, you're going to make your money just off of that. So I'm going to get into my moving average. You're looking for M's and W's, and you should recognize it by the time the ketchup and mustard cross. Now, this was our clear W, ketchup and mustard cross. That's a nice little W right there. But none of our moving averages was where it needed to be to take this buy. So we leave that alone. This usually happens first when you notice this happen and the water is not where it's supposed to be. The first thing you're looking for is the mustard across the water. On the days like this, you don't do any trading. This is usually the first day of a reversal. When this changes, you come to the next day, and that's when you're able to start taking your trades. The water's going to be on the bottom. Your catcher's going to cross the mustard up, mayo where it need to be, and you can take pretty much all these buys, and they'll be your most accurate trades. The best ones are the ones that have just touched the water or got close to the water as possible, and then they cross. So it's better to like take a trade like that. These aren't too far away, where these still would have been good. This one's a little, honestly, for me, that would have been good. So the other way to use the scanner is that, not the scanner. Well, yeah, the scanner. The second hardest thing people have to figure out is the stop loss. When you get a trade like this, it needs to be at least there's three places, there's a lot of places it can go. The first place is going to be under the candle that made the ketchup and the mustard cross. But we see the W, so we need to find the W first. You want to find the W and put your stop loss under the W. When the ketchup and mustard crosses, there's always going to be some little W. If you don't see the W, it's in your RSI. We already know you always find in your RSI and you're green across the RSI up to confirm the second leg of the W. So we want to put our stop below the W at minimum. If it's far gone, let me look for one where it's away from the water. I could have stayed where I was at. This would be perfect. This is our W right here. We got our bycatch across the mustard. We will put our stop below the W. If we need it bigger, we could put it below the water. If it needs to be bigger than that, you will put it at the low of the day. Your next low of the day.
You would still take that mail? You would still take that even though the mail's on top at buy?
Yeah, I would have. I ain't gonna lie. I wanted to show we're gonna on this one, we're gonna pretend it's at the bottom. I just want to show where you will put your stop loss. But you know what? No, I'm glad you said that. Because it could be something like this. We need to find the W. You could put it below the W, below the water. You could put it below the mayo. And then when we're using the ADR, you will put it at the closest ADR. You want something where for the day, because you got the period separators on, you want it at the low of the day for your buy. If it's too far, you don't want to put a big old stop loss, not if you don't have to. So that's why you got to analyze it and look to see if I'm just going to put it just below the W and that's good. I need to put it below the water. I was just putting it below the water at least. And then if that's something like this, it'll be okay to put it below the mayo because you want to find a low spot where the candles ain't coming back to for the rest of that day. Using the ADR, it would have gave you targets and they would all line up using those same targets. So I'm gonna do something like that. Let me keep my ADR. And y'all forgive me because I almost feel like I'm all over the place. All right. Yeah, this gonna be perfect. Let me see how far this go back. Right here. We only looking for buys. Scanner gave off the buy. Let me make this big as possible. We only looking at this day. It's our period separators. We got our W. You don't recognize the W, it's in the TDI. We got our W. We can put our stop loss below the W, which honestly is this candlestick. You want to find the candlestick and put it below that. That's below the water and the mayo. So that's a good area. And also, if we're looking at the day, this is below the low of the day. Out of this whole day, the candles never came down here. So we put our stop loss down here. That's a good spot to put it. And this is what that would look like. This will help you map that all out. So I just showed how to use this. It said buy on this candle here. So that's the open of the candle. That would have opened up at that buy. We would have came down here and found our stop loss first. This line here, this little gray line is the low of the day. So you put the high and low on your chart. So I want to put that a little bit below just to cover the spread. Stop loss is set. So now I have to come in here and adjust my TP to at least be a 1 on the risk to reward. That adjusted the open of the trade. There we go. It ain't grab the TP. There we go. There we go. All right, where's the reward? Where we at? 0.5, 0.6. We're gonna find the one. Bam, it's a little over, whatever. Cool. So in real time, when this pops up, we got it at the open. It says when it says buy, that's as soon as the candle starts. So this ended, that's the open. Bam. We hit buy. Find our stop loss, set that first. Come and set our TP to make it at least a 1 on our risk to reward ratio. We got the ADR set. So it came and hit. We got the first ADR. That's our first target. And then it came and hit the second one. That would have been our 2 TPs using the ADR. I've been telling everybody too to make sure you come up with your own trading plan so that you can have your own HIP goal, regardless of what the ADR does. And I'm suggesting with gold, anywhere from 300 to 500 pips, because that's like the new 30 and 50 now. Gold moves so much. So you would have set it for 30 pips. We're gonna keep this simple and just say keep it 30 and go up to the 30 with your measuring tool, your ruler. You would have found 30, and that would have been your target. Let's see. We're gonna measure the stop loss. Okay, so the stop loss is around pretty much at 50, it's at 48. So we could have took this to 50. And that'll give you the visual where it need to be. Everybody get that so far? Well, at least got a chart. Desmond, I know you probably ain't even set up. I don't know how much time you got or how free you are on this call, but we would have to get you set up. Like, I don't know if you downloaded the platforms, the charts, or anything yet to even follow along. I will have to go through that with you personally. Whenever you got time, let me know. But Julian, because you talking to me, do you see that?
Yeah, I can see it.
Okay. Luna,
Yes.
I want to make sure you get it. Is that clear to you?
No, it's not. It's not.
Do you have TradingView downloaded?
Yes, I do.
You got to scan. Yeah, you got to scan it too.
Yep.
All right. I'm gonna run that back, completely back. Your scanner go off. Your water and your mayo's on the same side. 15-minute chart. A buy go off. 10 o'clock in the morning. What do? We come in here and we're gonna find our long position. Long means buy. So we come and find that, click on that, and we go and mark up right where the scanner said buy. That's your entry. I don't know why that moved when I just put that right there. And I remember you asking me, how do we know what candle we entered on? This is exactly what you would use.
Okay.
Because if I can put this on the exact candle that I'm entering on, that little gray line is the open. It comes and shows it right here, 505, 5,005. That's my entry.
Okay.
That's where the open is on here. So you see the red 4979 on the right side right here?
Yep.
That's where the stop loss is. That's going to change as I move and adjust my stop loss. So
Okay.
I don't know why this keep moving all at once. I'm going to find my stop loss first. Because if the stop loss is too crazy or don't make sense, I don't even need to enter this trade. So Your stop loss needs to be below the water, at least. That's how we're just gonna do that. You starting off, put it below the water. Scanner go off. You want the water as close to the candles as possible. Now in this case, it was right the water right here, so it's right up under. So my next space is going to be the mayo. I need to look for the mayo, and I need to look for the bottom of the W. Because every time your scanner goes off, there's going to be a ketchup or mustard crossing. That means it's going to be like a W somewhere down here in your TDI. So you need to find the lowest point of that, which is this candle here. Let me see. Let me get rid of that for now. This right here. So you need to put it below that. You don't want to put your stop loss right at it. You want to put it a little bit below. Because what you're looking for is the price not come back down here below this point. On this particular day, see, this says low right here. This automatically shows me the low of the day. Wherever my chart is at, it's going to automatically go to the low. So if I go to this day and just it'll go right here to the low, basically. This is the low of the day. It was close to this candle, which made the W when I put my scanner back on. So I want to put my stop loss to be safe below this low of the day. So I chose this area as my low. Once I figure that out, figure out my stop loss, you with me so far on this part?
Yes, yes, I am.
Then we're going to adjust the TP. And what we're looking for on the TP is this risk to reward ratio to be at least a 1. Right now it's on 0.56. That means our stop loss is almost twice as big as our target. So we're going to lose way more money than we're going to win if we take this trade. So we need our risk to reward to be at least a 1. That means that I'm going to win and lose the same amount of money if I take this trade. If I lose, let's say it's $100, I lose 100, but if I win 100. If I am 50% accurate in my trades, I'm going to be at break even. But if I'm at 60, 70%, that's when I start making money. You with me so far on that?
Say that one more time. That last
Once
part
I
about
get,
the 50.
I'll go back to the risk to reward. As long as it's at a 1, we're going to work on our accuracy. If you're trading 50%, you losing half of your trades, you ain't made no money with this 1. But
Right.
once you get at least 60, 70%, the scanner on its own is like 80%, but that's on the hour chart and higher. That's why on this 15-minute, I'm saying to only take it if the mayo is on the same side as the water. You'll get more accurate trades. And you come up with your schedule, you're not trading up, you're not up 24 hours a day to take all of these anyway. So we stick to a certain time of the day. So once you get at least 60, 70%, you'll be making money with the 1 as your risk to reward ratio.
Got you.
And yeah. As you get better, you can get a bigger TP and you can put in and you'll have a 2. You could be 50% and make money with a 2. But with the 1 at 50%, you're right where you started. We stick to this, we'll be way more than 50%. And that's what your trading journal and all of that keeps up with, keeps your stats. Let me see. Hold on, I'm checking it.
Writing in it now.
Okay. Yeah. I'm gonna send this. I'm gonna post this one for everyone. I send it out to you, but I'll actually post this on YouTube because I'm explaining the detail of how to find your stop loss, your target, your risk to reward. It's all about trading plans. Because I realized the reason why I want to go over this so much is because I put trades in the chat and y'all might have needed to take y'all bag before I did. Because I want to, it could be blue. So I want you to have a personal pip goal so that you got structure of what you're doing. And that way you can be like, well, we see fly gold going for this, but I'm good right here, right now, and it's blue. So I'm gonna just take this money in my day so you can go pay your bills because that's what it's all about. Um, so that's how we come up with that. This should be the basis. Before you look at anything else, you're finding your stop loss and you setting your TP at a 1-to-1. Now, of course, I use things like the ADR. That's going to help you come up with your targets as well. So when we got into this trade, this was the first target. The 25%. It hit your first target. So there's a lot of things you can do when that happens. You can just sit, let the trade play out because you got a TP set. So you ain't even messing with your TP is set. It's either gonna hit your TP or hit your stop loss. But as you managing your trades in between that, you can do something like put your stop loss in profit. And this is for anybody that's a day trader and down to a scalper. That's why I want to explain this because this is beginner. This is if you just signed up, you got the scanner in your chart and you don't know what to do with it. This is exactly what you're gonna do as you keep managing your own trades. It hits your first target in your ADR, you set an alert. These populate already. So I set alerts for these. You see the line on the chart, you come over here where this plus sign is at, click it, alert. The top one. You click that, it's going to set an alert. So when that hits, you know. If you're somebody that's managing and watching your trades, you can take that money if you want. Or you can go put your stop loss and profit and look to see if it's going to come to the next one. Or if you just got your TP set and you only taking it if it hit that, you don't do anything. You just let the trade play out. Because in this situation, in detail, you could have took it here and you would have made your money. You'd have been good. Now, if you came and put a stop loss in profit, I'm not going to put a stop loss in profit unless I'm taking a partial, which means you got, let's say it was at $50, take at least half of that. At least half of that. You could have, when it got to this point, you can go into your trade, hit close. It's not going to close right away. It's going to let you adjust the lot size so that you can take some of the money. That's what I mean when I say take partials. If you don't know, I got videos on that on YouTube, so I can send them, I can repost them so everybody can see how they work. Um, that's need to be part of your trading plan. What you doing, how you managing your trades. Now, let's say you didn't do anything, you just got the TP set. It would have came and went back in the negative. This is our entry. It would have went in the negative, went back in the profit, and by the next day came and hit your target right up in here. If this was your target at a 1-to-1, it would have hit it here. If you use this ADR as your target, give it a few more, about another hour or so, it would have came and hit that here. So you got to keep that in mind. Don't jump out of your trade early because it's bouncing up and down. Your stop loss is your stop loss. It's either got to come and make a whole new low of the day or it ain't. The reason why you need to trust in your stop loss is because this is the catch up and mustard strategy. And what I mean by that is when these things cross and there's W's, when it's the real move, it don't come back. It don't come back down and take out like this is the low of the day. It don't come back down here. And the only time it do that, like something like this still went in a profit. And that still hit those targets. And then it came here and bounced off the Mayo and then went right back up. When it's the real move, it's gone. If that thing say buy and that's what it's gonna do for the day, it's gonna buy for the rest of the day, especially in New York session. So even if there's a little pullback and drawdown, as long as we set in our stop losses below the water, below the Mayo, below the low of the day, and it's not too much, don't do this if your low of the day way down here or something, and that's too much for you to risk. If you don't feel comfortable with that, don't take it. But in the beginning, you want the water and the Mayo as close as possible. And when it catch across the mustard, like the water should be like pretty much right there somewhere. not too far gone, and the Mayo right below it. Those are going to be your best trades. Now, when you know how to risk a certain percentage of your account, they can be down there, but you just still need to make sure you're putting your TP at that one. So that way it's a 1-to-1 risk to reward ratio. You want to practice that habit. You don't want to be risking, let's say you put it at a 1-to-1 and you get out too early all the time. That's going to actually mess up your risk to reward. It's not going to truly be a one. Because if you lose one of them trades, you actually losing that whole 1-to-1 risk to reward. But if you get out early too soon all the time, you're never making the 1-to-1 to cover those losses. You have to learn how to take a loss. You got to learn. If you learn how to lose, you'll know how to win. That's what this is all about. A lot of people scared to lose trades and scared to even tell people, hey, I'll be losing. We got to figure out how to lose. That's how you know how to win. So I'm going to do another example. You with me on that, Luna?
Yes, I am.
All right. I want to make sure you get this. You get this, I'm done. I always say that when somebody new come in. But so-and-so learn how to trade, I quit. So, so okay. We got a buy. Scanner gave off the buy. And I'm gonna show y'all how this works. This candle closed. Let me see where is that. Okay, this one, when this one closed, we see the ketchup and mustard crossing down here. What the scanner does is it doesn't go off until the candle closes. So when these candles close, green candle close, we know at the top of the candle is where it closed. If it's a red candle, it closed at the bottom. So green candle closed at the top. That means as soon as this candle opens, that thing says buy, your alert goes off. That means right here is the entry. I want everybody just to understand that. That's what the arrow for. You find the arrow, it tells you the exact candle it opened on. So that means bam, 12 o'clock a.m., scanner went off and said buy. Ketchup and mustard cross and said buy. Whether you don't got the scanner, that's how that works. Ketchup cross the mustard, bam. So I find that entry and I put this on the exact candle. That's what I'll be doing when I come in here and set these. Bam. All right, found my entry. Now we're gonna find the stop loss. This stop loss don't need to be this big. We got the water on the bottom right here. We got the mayo. We got the blueberry. As long as it's below the blueberry, it's good. We got the SADR. So I'm going to put it on that. These candles never hit this SADR, this red line. That's how I found a stop loss on this one. That's how that will work. So now my risk to reward is a 1.3. My TP is bigger. So for the sake of just still showing a 1.1, I can adjust this down. I could have left it there. That was close enough. We're going to bam, one. Stop loss TP the same size. Got into the buy right here. This is the exact candle I put it on. It came and hit it right here. By the time it got right here, we done. The average daily range, these pop up every day. So that's going to show me the first target I could potentially go for. I got into that, it hit that. I could have got out right there if I wanted. I could have took a partial right there if I wanted. I could have put a stop loss in profit right there if I wanted. We just gonna leave it where let the trade ride. It's either gotta hit a stop loss or a TP. We hit that, bam, that's it. If you're doing a 1-to-1, you done for the day. If I want to go for the next target though, now I'm increasing, showing what you would do if you're doing more than a 1-to-1 risk to reward. I put it at the next target, we had a 1.5. That's perfect. You get to that 1.5 on all your trades, most of your trades, you making money. You can lose half of them and you still making money. That's the goal. So if I went in here and went for that, bam, it came up and hit it right up in here. Ooh, let me see. See what the thing with this is I can adjust that. So we're gonna go right to that candle. Bam. Now if I want to go for the rest of these targets, because when I come in here and set my trades, I always put it at the 100%. You come, that's a 3.33 risk to reward ratio at that point. You can come in here and pick whichever one you want. I'm always going to show you what I'm going for. You pick your own trade and go along the way. You can come in here and adjust this and find your 1-to-1 and go for it, make that your TP. You can pick the first line it gets to and set that as your TP. You can go for the second one. 9 times out of 10 is going to hit two of them. And as soon as you enter your trade and set all this up, we trading on MetaTrader, but on TraderView is where you come and do all your analysis. You come in here and set that up. We're going to hit put alerts on these. When we hit that alert, put an alert on that as soon as we enter. Or when they hit it, our phone going off. Boop, boop, you can name, it'll just say price at, and it's going to say the price. You know that it's at your TP. I believe you can go in there and edit those to make it say TP, but that's a whole lot right there. I don't waste my time doing that. Go in there and just put it in there. Bam. I come in and put it when I be sending in these trades, I got alerts for all of these as soon as I done sent it in. So all of them hit my phone just going off. Now, if you went for all of them, it didn't hit that until the next day. This day ended right here, right close to it. As soon as the day opened, bam, came in and hit it. That's how that works. Let me see. Let's see the chat going. Randy, I just got me a new phone, man. I ain't even tried to log into my trade locker. You're welcome, Makita. Glad you on here. Will the trades look like the same with Hakanashi candles? Yes, they no, not the entry. So we're gonna go over that. What is this? So I make sure I don't lose my day. February 20th. We're gonna go to Hakanashi candles. The crosses are different. So where's February? Let me find the 20th. Is this the day? Yeah. Now I ain't gonna lie, right here, they worked out. We got a buy right here on the scanner. And we got a buy right here. That looked the same. Sometimes I did research on this because I was looking for that myself. Hakanashi candles is sometimes going to have different entries because the candles open differently. Hakanashi candles open in the middle of the previous candle. They don't open where the previous candle closed at. Like regular candles do. I suggest, because as you see, I got this on here, I do use Hakanashi candles. Keep your scanner on a regular candlestick, and then once you got your entry, you can switch to Hakanashi candles after that if you want to use that. And I'm glad you said that. You are a Hakanashi. I know you. That's a tool to have because that's also. I don't know if there's alerts for Hakanashi candles. That's crazy. I never thought of that. I don't know. I have to look into that. But since you personally, I know you use that, you can use that to stay in your trade. You already know how to use them. So because you asked that question, I'm gonna go over that. So everybody that don't know, and I do got a small video on Hakanashi candles, it's probably like 10 minutes or something like that. I'm gonna go find all of them on my YouTube and put them all in the chat after this. If we get into a buy, the real signal, and let me make this bigger, the real signal for the buy is two flat bottom green candles. Once you see two flat back to back, that's how I do it. That pretty much you can look for it to stay in that trend. So right here we got this one's flat and this one's flat. And so if I notice that and then the ketchup and mustard crosses after and confirms that buy, that's good to go. If it does a buy and then you notice there are no flat ones and then two flat ones happen after that, you can take those entries. But usually with the way that this works, you'll notice the two flat ones before the scanner goes off. Like even right here, these two was flat. Was that what? It was three of them. One, two, three flat bottom candles, and then by the fourth one, The ketchup mustard cross and the scanner went off. So you use that, and then the rule is the same for getting out. So if I buy on two flat bottom candles, I'm going to sell on two flat top candles, the red candles. So basically, you can hold these until you see two flat red ones, and then you get out. Now, I'm gonna break this all the way down on this specific entry of how that would have played out. For one, the first target would have already hit before any candles already any ever turned red. We got two flat bottom, and I don't know if y'all can see this. If y'all can see this, please let me know because I know I got this over it and it looked crazy. But if anybody can see it, I'm just keep on going. So we got two flat top candles, and we have to let these close. We don't know they flat tops until they done, which means by the time this candle happens, we doing something with this trade. Now, it depends on how you manage your trades. That could just be a partial. It could be a put a stop loss in profit, or you could be getting out completely altogether. There's always your three choices with managing your profit. You either gonna put that stop loss in profit. My favorite thing to do is always take a partial. I'm gonna stay in my trade. I'm gonna take a partial and leave the stop loss where it's at and let it ride. Because by the time I did that, if it hit that stop loss, my profit is still bigger and I'll still be up for the day. That's my whole math behind it. But it depends on how long you holding it too. On the first TP, that's what I'm doing. So, all right, we at that point, two flat tops. But then it came in and do flat bottoms all over again. So that let us know it's gonna continue to keep going up. There's no two flat tops here. We got one, and then these got wicks on top. So we staying in that. There's no sign there. We still got an uptrend. We got two flat tops here. Same thing I already explained. Whatever you doing with it, take partial, stop loss and profit, get out all together, whatever. But then we got two flat bottoms to showing the buy all over again, and then after that, the scanner gives off the buy. So we in the buy. All of these flat bottoms, these are all flat. That one got a wick. That one's back flat. These ain't flat tops, so we ignore those. They came and did a stop hunt, held the Mayo perfectly, and then got right back up. Now, if your stop loss was where it was at in the when you first got in the trade, and it's below the low and below the W, below the water, below the Mayo, and in this case even below the blueberry, it would have had to come in close below the blueberry to take us out this trade. So we holding that. This ain't a sign to get out because even though it did all that crazy wick, it never did two flat tops. So we gonna look for these flat bottoms to come back and stay. We know to stay back in our trade. And at this point, it rolled all the way up. We don't see two flat tops until here. Honestly, these ain't even it. There's one there, but then that got a wick on top. Then there's one here, then that got a wick on top. And then we got two flat tops here. That's how I would manage that trade using the Hakanashi. I would love to hear Luna if you use them any other way. I think I've asked you before. I didn't know if you had anything for me.
Um, I normally usually look for the vector to be three flat tops or three flat bottoms. And
Mm.
then once I get those double wicks, I would get out the trade, but that was on a different time frame. And I see that
It
you
works the same
okay.
on the time frame. Yeah.
But you're holding it for a distance. So yeah, I guess it would work the same.
Yep.
I would just look at it for I was trying to look at it with three flat tops, and that would
Mm.
be considered the vector. But yeah, I guess the two flat tops would get you in there too.
Yeah, it's a little. So I see the difference in that. You will hold your trades longer based off of those three because it'll take. Sometimes you'll get two flat tops and not get a third with what I just showed. and that would have made me get out sooner. But it also makes me get in sooner
Well,
because as soon
actually,
as
I would have got out as soon as there was a double wick. Um, but I know that it's taking everything overall. Um,
mm,
yeah,
by double wick, is it like okay, you see this got a wick and then this got a wick, you getting out?
yeah, because of the consolidation, like that would be considered. I was taught that that was considered consolidation, but now that I'm looking at it, it's like it would, you would still be in profit,
Yep.
if you stay in all the way. But you could
Yep.
take the partials up into the double weight. Is that
Yeah, where you would usually get at, you could take a partial. That's taking partials is for people that's trying to transform into day traders, swing traders to position traders. So if
okay?
you a scalper and you would just get your bag, bam, you see them double wicks, you get up out of there. But if you want to catch this for the long ride and say, well, this might do the whole thing for the rest of the day, because it's going to go up and down all day, even if it's just a continuous uptrend. But
Yeah,
yeah, you would end up holding it longer.
I still got to take that test that you sent me on what type
Those
of
is
trader.
okay. We got the catch up crossing up. Catch up must have crossing up on the 15 minutes, so we good. I know that trade good. Then that buy, if anybody's still in that. Yeah, that test is gonna be the basis. It's gonna explain the pips, the lots, all of that kind of stuff.
Okay.
But she Makita said she could see it. I'm done. I'm done class over with. You see it? I wish my boy Marvin used to say that all the time. All right then. And then okay, you asked how do I take my partials? Is that late or did that just come in? Oh yeah, how you trail your stop? You asking me? Woo! I am not gonna start trailing stop until somewhere on the second or the third day. I'm not doing that on the first day no more. So I gotta stick with that plan, do it every time, and stick with that. So my new rules is entering at least twice. 3 times would be lovely. And so what I'm doing is my biggest lot size is my first TP. That hit, I should be good. I'm going for 2 TP, so that next lot size is gonna be my second TP. What my goal is once those first two hit, that should be enough profit to where I leave my original entry where the stop loss was. And if it hits that stop loss, I'm still up for the day. That is my goal. I would like that to be the case when it hits the first TP, so I might just have to start taking like 75% on the first TP and then break that down into twos. And the bigger the lot size, the better that looks, the more partials you can take. So that's a lot of discipline. So what I would do is, okay, I got out the first two trades. Once that day is over with, and I'm in a buy and it bought for the day and we caught that whole thing, that next day I'm putting my stop loss at entry. And I believe it's going to work best if I stick to my trading time. So I'm not putting it at entry until New York session because I got to let the pullback and all of that play out for London, Asian in London. Because if it buy and then Asian London come in and it's doing like, yeah, this pullback, this kind of stuff, if my stop loss is still in the original place, it won't come take me out if I put it in profit. But then if it's going to keep buying by New York, it's going to take right back off. So once that take off, I'm gonna come put my stop loss in profit. And then if it give me a third day of rise, then I'll start trailing it, start adjusting the stop loss more. It's already at break even at the entry on day two. So at the end of day two or when day three start, even at the beginning, even during Asian and London, I don't care. I'll start trailing it. I won't wait till New York then after that. I'll just start trailing it from there. By that point, whatever happens, happens with the trade. I done took my partials, I'm good. And also at the same time, if there's other entries on day two and three, I'm re-entering with a bit lot size all over again and doing the same thing all over again. Woo! That would be nice playing out like that. I get that 70, 80% of the time. We're gonna be some rich mugs. But that's over the years because I've battled with that for so long. The trailing stop is probably the hardest thing to get. Taking a partial, that's nothing. And then waiting till the day's over with to put a stop loss at the entry, that's easy too. It's that trailing stop that usually mess me up more than anything. Yeah, so you know what though? I can't say this. I think I'm focused on MetaTrader right now because I want to figure out the whole FTMO game. And there's no trailing stop. I might not even use a trail. Well, I'll adjust my stop, so I guess that's the same thing. But it won't be an automatic trailing stop. It won't be moving on its own, but I'll be moving it up and adjusting it up and keep going up. Because I can't expect to get every single pip out the market. But the bigger your lot size, you could just leave your stop at the entry, especially on day like two and three, and it's just riding and just keep taking partials at the targets using the ADR or whatever your pip goal is. Every 100 pips, you're taking a partial or whatever that is. Could just leave a stop at worst at the entry and don't even do trailing stops. So sometimes it could be, you know how it go. It could be 4, 5 days in, and it come all. I don't see no examples, but it could be something where it came all the way down and it went all the way back up. You like, man, I could have just held my original entry. The trailing stop done took me out. What do I do about that? So I would say leave it at break even and try that. That might work. I think I'm gonna try that. You might say I don't even do trailing stops no more. I just keep taking partials. Because at some point we got to get out. I don't know. And one thing that helped me um was leaving that penny. Just leave that penny in there. 2 pennies or whatever. And let that right that'll ride for days. I did that before, and the longest I was in the trade for months at one point, a couple of years ago, and it was just a penny though. And I'm up like thousands of pips with a penny. But that's the only way to scratch that itch, I guess. And of course, the only other solution to stay in your trade is to go buy a gold bar. We holding this. We holding it. Gold gonna go up. We'll go buy some half ounces or something. Um, I want to ask, was that clear? Especially for Luna Makita says she see it. I wanted to get that. Like that's the basics of entering trades, putting stop losses and targets. I'm gonna go ahead and do this day and explain that once more again. Because it's a mixture of okay, find your stop loss first, find that one-to-one risk to reward. The hardest part is gonna be your stop loss. Because even we'll be on calls and um like you'll see us go through the scanner and be like, that was a good trade. That was a good one. It's all about where do I put the stop loss? And it needs to be below the W. That's number one. Because even this, and we're going to use this for an example. This is the W right here. And so we can find that in the TDIW. The second leg is where the green crossed the red. That's the easy way to always find it. You see the buy go off, it's always gonna show it in your TDI. Every time you see a buy, you're already gonna see the W in the TDI with a green cross on the red. That's every single time. You'll never see ketchup mustard cross and this didn't cross before that to find your W. So that's how you know. And this situation, why this is interesting is because the water is not on the bottom of the W. So your place is always going to be find the W and find the water. It needs to be below one of those. Whichever one is lower is the one that needs to be below. And after you find that space, then you want to find the low of the day. All right, go back at the water. You got to break that water and get above that water. We good to go. You could take a partial if you want to do now. Let me see. Let me double check this. Did it hit an ADR? No, I wish I would have caught that thing down there. It didn't hit none of these targets. Yeah, I didn't even set an alert. Let me set an alert for that. Ooh, definitely taking one of these out. All right, cool. I don't care what happens with this trade after this. I took out my first target with my biggest lot size. I'm good to go. So make sure you got your high low set on your chart. It's always gonna find a high and a low. That's what I'm doing, high and low. You can adjust your screen till you're only looking at this day. That's what the session breaks, they're called session breaks on TradingView, these blue lines that separate the day. On MetaTrader, they're called period separators. You set that up and you find the day you're looking for, and because as you see this high and low, automatically moves wherever you're at on the chart. So we go to that day and it's automatically gonna show us the high and the low. So our low is here. If I come and I'm buying here, and these are pretty much in the same spot, so that's good either way. So buy right there, bam. Put it on that candle. Remember, Luna, you can use this to know where your entry point is, because you can adjust this anywhere. You put it on the candle you entered on, that's how you know. Do that.
Gotcha.
Yeah. Got my stop loss below the low. I mean below the W. It's below the water. The low of the day is down here. So if I wanted to put it that low, well, we're gonna do that just in case. Because the mayo's on the same side too. So if we're gonna use the mayo, then we need to go a little bit below it. That means we're allowing, let's say the candle come down there and hit it, they don't go below it. We still safe if that was to happen. I just move I'm trying to move the whole screen. That's about it. What we also look for, this is how you find your stop loss. We use the ADR. That's always going to pop up. The green, the open of the day, and the red lines. We can make sure we put all this together to find our best spot. So we could have put it, honestly, if you just wanted it below the W, you could put it right here at the open. That's one spot for a stop loss. If you're looking for to be below the Mayo, we can find the next red line below that, and that's our good spot. What you also got to pay attention to is that the candles never hit this one. So even though it's not below the Mayo, this would have been a good one. Because all the stop hunting and everything that happened, and we looking for buys, they never came this low. So that's a good spot too. It depends on how you want to do it. Some people like tighter stop losses, and they'll risk it right here. But I'm gonna do worst case scenario and go to this red line. It's below the water and below the Mayo and below the low of the day. So it's clear everything. So now my risk to reward is at a 1.18. We can just pretty much that's pretty much a one. I'll find that one. Bam. Now, okay, our entries here, buy. So where are our targets? We got the ADR here for TP1. We got TP2. We got TP3. If we go for the one-to-one, it's up here. And you need to find your own personal pip goal, which I say on gold is about 300 pips. At least we're going to do 300. As you get better, you can increase that. The reason why, because TradingView does it different, so what we'll be looking for is 30. I don't want to confuse that, but I honestly might just start. I'll explain it every time. That's how I do it. Because this is how you know the money is what you know. That's how you know how many pips you got. If you use a .1 lot size, that's $1 a pip. So if I go for, let's say I put this at 30, I got my measuring stick and I find 30 on here, and it's right here. It say 30 on the left side, 0.78, that's 30. If I look on the right side, it's 3,078. With gold, that's 300. It's the number in between those. You got 30 and 3,000, so it's actually 300. The reason why it is because if I use a .1 lot size on my MetaTrader, .1 is $1 a pip. So if I set this as my TP on there, I find that number. It's at the 5180. If I go all the way over here to it's at the 51. It's at 5180 when I put it on 30. 5179, 5180. So if I was to go in MetaTrader and set that as my TP, 5180, with a .1 lot size, it's going to be $300 because it's $1 a pip. So that's how you count that. So if I go in there and set that, okay, that's a pip goal, 5180. Where's that at? Right here. That would have hit right here. So it's in between TP1 and TP2. I got to decide what I'm going for at this point. Something else you can do as your trade increases, your trade goes up, is you could adjust your lot size. You can come and say, okay, I'm putting it up here above the Mayo. I can come put it here, still below the W, still below the water. And then you get to a point where you can put it in profit. It's not going to show me that on here. I can't do that on here. But you can adjust it as your trade is going as well. As this started to go up in profit. And your risk to reward is starting to increase. So now it's at a same TP, it's at a 2.3 now. When I had it down there, it was at a 1. It was at a 1 down here below the Mayo. The ADR, the next red line, was at a 1.4, which is perfect. That's the perfect range. You want to get close to that 1.5. That's the real goal. And then it started to increase 2.5. And it gets higher and higher. Y'all understand that?
You repeat that?
I'm gonna start with it just on the lot size. So my TP is the same. Down here is a 1, risk to reward 1 ratio. You can use the ADR. The ADR, you put it on your chart. This is what I go by. This helps you come up with your stop loss TP targets where it's potentially going to hit. Because once you understand the ADR, it's going to hit the 25% and the 50% line almost every day in either direction. In this situation, it didn't hit none of these ones down here, so I can use them as stop losses. So if I put it here, my risk to reward went up to a 1.4. That's the sweet spot. 1.5 is your sweet spot. You start getting your trades to where you're using that as your risk to reward, you can use that for the rest of your life. Potentially. You come up, but as you get better with it and start being able to read the markets more and saying, I don't need a stop loss that big, I can make a tighter stop loss, then your risk to reward increases. That's all I was explaining. That's pretty much it.
Okay, got you.
Now we've kept it right where it was at. As far as the TP, it came and hit that by the end of the day, the open of the next day. So it hit the first target, hit that target same day, and hit the third one by the end of the day. And then it came up and would have hit that 1% up in here. After that, turned around. That was actually perfect. We just went for you can always use these. This is all really what I use. The ADR. All right, so today I'm gonna show the day on the sell side. I'm gonna do the short. I've been doing the long. I'm gonna go use the short position. That's for the sales. Let's say you took these sales off the scanner. Right here is where that candle opened. Bam. I'm gonna come in here. I'm gonna find my stop loss. Got this red line right here. I could use that as my stop loss. That's above the water because we're looking for sales. The water's close to the candles. That could be my first target. If I want to do it at the high of the day, because this is the high of the day, we got the high up here. Um, and this is always your high and your low of the day is always going to be your safest one. If it's going to do what it's going to do for the day, you should be able to put your stop loss at the high and come up with a 1-to-1. This going to be some new sauce, and that should hit. If that don't hit, then it probably ain't going to do what it was supposed to do. Now, the thing with the sales, it almost hit. It got close. This was actually a good sale, even using that, because it hit the 100% ADR. Let me take off. Let me show that clear. It's going to pop that up. Take off the pass. Bam. 100% right here. 9 times out of 10, it's going to hit the 25 and 50. Those are going to be your favorite ones. I can't say which one, if it's going to hit the green one or the red ones. You got to know what direction your trade going in. But it always hits the 25% and always usually hits the 50%. Sometimes they get close to the 50 and won't hit it. It got a 75% chance to hit the 75, and then today it hit the 100. So we would have took this sale when this came in. If you had to put your TP here, you would have missed it. This would have never closed your trade. You would have went right back. You would still be in profit right now with this entry, but you would have missed that TP. When you see this 100% and you set up something like this is a 1-to-1 risk to reward ratio. Go for your 100%. Just put that as the TP and you'd have been good. It came and hit that and you done. Now in real time, when I set this and like if I would have used this and entered this trade on this sale, that would have been your first target. This is too close. So I wouldn't have did nothing with that target. So what becomes my target in this situation? The next closest line, which would have been my Mayo first. I'd have had my Mayo as a TP, and then this right here could have been the next one, but they so close, I would have just took the Mayo as a TP. I wouldn't have bothered making this a TP. They too close back to back. You might as well just pick one. So we're gonna pick the one that's gonna hit first, which would have been the Mayo. You got it in sale that came in and bam, right here hit your Mayo. It took you out that trade. And then I would have used this for the next target. And you'd have been done. Risk to reward is still a 1. That's good to go. I probably would have had mine up in. I would have did it like this. The open is always a good spot to go to too, though. What that open means is on the day chart, if it come back to the open, your candle's going to turn into a doji. If it goes down all day and then goes back up to the open, that candle's going to look like a doji. So unless we looking for that to happen, the open is always going to be a good spot for a stop loss as well. And then using that, I would have had a 1.5 risk to reward ratio. And I still would have went for here, which would have gave a 1.24. That's good enough. You made money that day. You're done. It came and hit that 100% and reversed off of it. That's another reason why I use this, because these are TPs, these are stop losses, these are entries, depending on what you're doing. When it came in and hit that, I probably should have set an alarm for that. I was getting myself together. I wanted to enter as soon as it hit that. I wasn't looking for this to keep on selling. I was looking for it to hold something and buy. Now, if this don't come up here and make a come back to the open or anything like that, then it'll probably sell tomorrow. That's what tomorrow we'll be looking for sales because it's gonna have to. If it's below the water on the hour tomorrow, I'll be looking for sales. You might not see a sale go off on the hour chart. So if I see any on the 15-minute, I'm taking them. The hour chart, I know the water are going to be on top. Let's say if it's on top. So the water will be on top. The ketchup must have crossed up here. So it's going to be less likely that it crosses back up and then back down again by tomorrow. If it sell for 3 days, we'll see a sale on the hour chart on that third day. But we might not see that tomorrow based off of just how I know the moving averages move. So as long as that water stay on top of the hour, I'm taking all my sales that the 15-minute chart give off. I want everybody to take note of that. We're looking for sales. That's if the water stay on top on the hour. If it don't, we just watch the chart and see what happened and take what it give us. But this could be a reversal coming in. Y'all with me on that? So I do too. When it's up, every all cool. I don't want to overdo this. So I'm gonna put this in because I was in detail about putting a stop loss. I think that'll help everybody figure this out. To me, the stop loss is the most important part. You can't just go in there and hit buy because the scanner say buy, and on the day it go wrong, you don't know when to get out. So you got to figure that out. You got to know how much money you risking, how much of the account you risking. You want to know where the stop loss is going at first. You can always adjust your lot size to how much money that's going to be. So don't confuse the two. As long as you know where you're getting out, you want to know where you're getting out based off of what the market is going to do, not off of how much money you're going to make or lose. You need to be able to read the market first to know, okay, I got my stop loss in a spot where I don't think it's going to hit it and I'm going to make money from this trade. I got it below the water. I got it below the mayo. I got it at the low of the day for my buy. I got it at the high of the day for the sale. Once you figure that out, you can adjust your lot size to not over leverage and risk your account. You want to stay between 1% to 3% per trade. That's going to be the only part. Let me see. I did a small video on that, how to do risk to reward on MT5 using the app. I'm gonna make sure I send all of those in because all of those are small little videos. They're like 5 minutes, 3 minutes, stuff like that. I think one of them might be 10. What's different because I'm showing how to do this on MetaTrader is that it doesn't have the risk calculator like TradeLocker does for those that's familiar with TradeLocker. with trade locker, you go in there, you find your stop loss, and then you just hit the risk button, and it automatically picks your lot size because you're picking 1%, 2%, 3%. So you gotta do the math with it on MetaTrader. There's a few out there. I'm gonna see if I can find a good risk calculator. To me, that's the only thing MetaTrader is lacking, is that then we all be good to go. Until you figure that out, you trade with pennies, and then you get familiar with how much you need to be putting on these trades. Um, but I am going to show real quick while we on here, and I'll still send a video of how to sort of do that with the phone. I'm gonna do my best with it because it's not going to give me a percentage. I'll be doing the math in my head, and so you got to know how much 1% of your account is basically. If you got $1,000, 1% is $100. So you shouldn't be risk. Actually, it's $10. Excuse me on that. You got to know how much the percent of your account you're willing to risk first. You can do that on your own. I don't know everybody. Just find out 1%, 2%, 3%, whatever you're doing of your total account. Find out that math and whatever number that is. Your stop loss can't be more than that number. So what I do, I'm about to transfer this. Yeah, give me a second.
Fly girl, it's kind of hard to hear. Not sure if you're aware. Just want to let you know if you didn't know.
Y'all can hear me now?
Yeah, loud and clear. Thank you.
Okay, it was attached to my speaker. All
Okay.
right, I'm gonna start this over. So we're gonna hit this clock icon up here. Pay attention to the wording. When we enter trades, that's market execution. That enter you into a trade right away. So when you see buy limit, buy stop, sell stop, those are pending orders. I'm not going to use this to enter the trade. I'm only going to use this to figure out my lot size. So let's say 1% of your account is $100. I'm going to find my entry. And since I'm looking for a buy, it's going to be a little bit below, but switch it till it says buy if you're looking for a buy or sell if you're looking for sell. So we get as close to the prices as possible. If I was to buy, that's where it's going to enter me at. I'm going to hit my stop loss down here at the bottom. I got the stop loss on the chart. I'm going to put it where I want it. So let's say I put it here. And now I'm only risking $100. I'm going to go to the middle of the screen. I'm going to adjust my lot size until that gets to $100. That would do, okay, there we go, bam. So that means with a 0.02, I'm at 102. I can adjust this a little bit. And that's how I'm going to figure out what lot size I'm going to use. This is the best we could do on MetaTrader for figuring out what my lot size should be if I'm only risking a certain amount of money. So let's say that's 1% was $100. So let's say if I want to risk 3%, my stop loss stays in the same place, but now I'm risking $300 instead of the 100, and I can just adjust my lot size until it gets to $300. That's going to be the closest I can do is the 292. So that's how you figure that out. You will come in there and hit this clock and figure that out, and then when I'm ready, I just tap my screen, get rid of everything, and actually hit the buy button, which is the market execution. I would just hit buy. I already know my lot size, and once I enter in, I would just adjust my stop loss down to where I put it at. See this right here. This is my stop loss now. So let's say if I entered right here, right now, and my stop loss is already set, and it's showing me I'm risking $400 right now with this entry. So that's how that works. It does the same for the TP. If I come in here and I put the TP, you see the dollar amount changing. So if I want a one-to-one risk to reward, I would just make it the same. I'm risking 410, so I can put my profit at 410. It's not exact. It's been real tedious sliding it. But that's how I would do that.
So what if you raise that up to say double that, 800? Would change your risk to reward?
Then 2-to-1 instead of a 1. Because
Uh,
now I'm making twice as much as I'm risking.
and what's the disadvantage of doing that, of increasing that ratio?
There is no disadvantage. That's just up to you as a trader if that's how long you're going to hold your trade.
Ah, got you. Okay. Time.
Mm-hmm. But that's how they go. You see. Yeah, I'm definitely now I'm spent. I ain't gonna overdo anything. So now if anybody got any questions or anything, I'll go over it. And if not, I need to be off of here by 12.
So if you was to say the steps to taking a trade is the first to identify the high and the low of the day, would that be the first step?
My bad, I switched back to my laptop. You said finding the high and the low is the first step?
Yeah, I'm asking you what would be the first, the second, all the way down to the last step of taking a trade? Like what would be if you were to outline it?
First step is to find your stop loss. So that means you need to find, if you're looking for a buy, you need to find that W or the ketchup and mustard cross. You need to find your W, find out where the water is. You want your stop loss below the W, you want it below the water, and if it makes sense, you want it below the mayo. And if you can, the best is going to be at the low of the day.
Okay.
So you would find the low of the day. So you need to find the W first, then the water, then the mayo, then the low of the day, along with your ADR. The ADR is going to give you stop losses and TPs.
Okay.
Once the stop losses hit, you adjust your TP to a 1-to-1 and go from there. If the ADR gives you targets before that, you can use those as TPs. Or if you want to just wait till it hit the 1-to-1, set that as your TP and let the trade do what it do.
Right.
In a rare occasion, as long as your water and your mayo's on the same side, you might have the blueberry at the top. Then you can make the blueberry your TP. Sometimes that happens. As long as the mayo and the water on the same side, you good. I guess something like this would be the first example I see. Is the screen, is this shot? Y'all see my chart?
Yes.
Okay. So if I would have took these cells, the water and the mayo, well, they ain't on the same side. For example, if they was the blueberry on the opposite side, I could have used the blueberry as a TP. Yeah. When it's like that, it's like that. These are kind of close together, but this would have been one. The water and the mayo on the same side, and then the blueberry could have been a TP. Them real close though. But the concept's still the same. Or even this right here is one with this cell. They wasn't, the mayo wasn't on the same side when it happened, so that's not the best example either. But the blueberry was down here, and I could have used the blueberry as the TP. Trying to see if they actually show one. Probably been a minute since that happened. I don't went so far back, the scanner ain't even showing the signals no more. But yeah, that's how that worked. Any
Okay,
other
so
questions?
so the last step, what's the very last one?
On the last step,
Yeah. I mean, other than hitting sell or buy.
some of what I had just said. Hold on. I'm trying to find it. Where that thing at? I guess it's that. Okay. After placing your stop loss,
Yes. Or no,
uh,
just in the take profit to the 1-to-1 ratio.
oh, okay. I'm gonna do them all. First, you need to have your own pip goal, which could be the 300 pips with gold.
Okay.
That's gonna be your first pip goal. Then the 1-to-1 risk to reward ratio. So you set your stop loss and find the 1-to-1 with the TP. That's your TP. And then the other final step is the ADR.
Okay.
You can use those to line them up with each other and find you can pick one. Like if your ADR is close to if your 1-to-1 risk to reward is close to the ADR, and pick one. I would pick whichever one is going to hit first. If you got a risk to reward, say like this was a 1-to-1 and it's up here, I would have picked this one and just get out here. Just for an example. It could be closer than that or further than that. But like if it was something where it was like right here or something like that, and you just pick this and get out here. Yeah. That's how I would do that. Y'all good to go. I'm gonna go ahead and end it.
Thank you.
EMA'S stack, yeah, aligned. RSI confirmed, now press the line. From deconsolidate elation, the pop phase 1, 2, then we let it rock. No emotional overtrade, no emotional overtrade, just rules applied, foundation laid. full charts on screen. 9:30 sharp, what you know I mean. If you're tired of price, we're guessing where it might go. Pull and execute, let's grow. Trade love with fly gold, giddy words, discipline to turn gold. KM and we code it play. Scanner ping, that's told the signal structure. Focused in control. Execute with live fly gold. Tuesdays, 30 Eastern, have the roll. Pull up and execute.